Welcome to the Breakfast Club. It is Wednesday, the 22nd of October, 2025. Welcome, everybody, to the last show of the month. We'll be back in about 6 weeks or so. I may do another on the road kind of session, but can't promise anything. That's why I'm just putting in the last show until the new year, or till December at least anyway. So we'll see where we go from there. Let's have a look at where the markets are at today. Why is this here? That's what we're looking for. This will be here. Let's look at a 4-hour chart. Rejection block's been hit. We've eaten through this BISI. We've retapped the city. So we've got an overlap sitting here still. And we've ran back through this level. So you usually have to wait for market structure shift, right? So, or you have to get right down to a lower time frame area to play in. So you got this BISI above you, this huge city below you here. And a retest of this one down here. If we break through this again, take out these lows and find some support in here, this could be a run all the way back down into, 50% of this range. That would put us in a right back in the SIBI here. That would fill that whole thing in. So be right inside this breaker. All these candles making the breaker that takes out the lows. I think that's equal lows there. It's the low on that candle. It's 410, 420. So this one actually swept the lows. So this is the old bull flag forming in here for the retail perspective. So they may be just waffling here, ready to take out those highs and then look for your reversal. So I guess you could you got to look at this whole box here. Like an inclusion zone, you have to include all of these BISIs and the SIBI overlap as a retest to come down, and all these BISIs here as levels of support to go higher. That would be inside that box. So, and that would bring us right back into this breaker again. On the upper portion of that range, we're still inside. These two here, breaker here. Swept these little lows. It's a retest of the mean threshold. Ran higher. Small swing here. Takes that. Immediate rebalance. We have no retest to this level here. We could see one more little run down to 177 here. Clean out this liquidity and then take it higher. Hard to call in here on a 4 hour anyway. So let's look at a 1 hour. That brings us right back inside this range, and it's all buy side delivery. When you're in this consolidation, all you got to do is say, I got to, unless you're trading at small little ranges or hour to hour levels, you got to wait for a displacement. You got to get that consolidation. You've got to wait for that breakout. Watch what forms above that breakout. We get an immediate retest of the highs to the bodies, like CAM model 1, all the way back to the consolidations. That causes good encroachment, and then go higher. Take out those highs you're looking for. And because they're so close to the old highs, you got to ask yourself, is this going to be worth the quick run? Or are you just going to wait for the highs to get taken, look for a continuation model, and then, or you can look for a reversal model. That'll be on the hourly chart. So unfortunately, when you're in this little range, you really got to be, unless you're a real stealthy kind of trader and you like these little internal range liquidity hunts, then you're just hunting small little ranges like this inside that bigger consolidation. And even these can be quite challenging. Range extension. Trade back into it. Reverse. Now you're inside this one. Got equal lows. There's nothing really down here. If we go down, I can see us reaching below this level. And it will be quick. Even at a 15-minute level, you're looking for a little breakout there somewhere, hey? 15 minutes, not really giving us much either. 5 minute, if you're trading 5 minute markets, we've traded above, come back to it. So that would be a long right there. Watch this close in the next 1 minute. Let's see if we can get this closed above here. Come back, find some support off this last up close candle, which we did right here. We closed above it, tapped it, tapped this order block, and now we see it go higher. Now I'm aiming for up here. This is the target. Again, you've closed above. Let it come down, tap it. That'll be a long into here. Morning, Hadid. Reza, good morning. Erica. Is that Erica from like a long time ago, Erica? Like last year, Erica? Yes, well, welcome back. Where have you been? It's good to see you again. I hope you were doing well. You're quite wrapped up in some big business deals. Last time we chatted, you were quite busy. I hope you and your husband are doing really well. These super fit people, you guys. Erica's like, her and her husband are like ripped. They are super fit people. So exercising, busy business people. Welcome back, Erica. So thank you very much for your time. Welcome back. I hope you had a great life. I hope everything's been going great for you. And everybody's healthy and happy there at home. Is it last year, Eric? I started my business, got super busy, and now looking back at the market. Good for you. Wow. The business is going well? Yes, you remember. I started the business, and yes, we are bodybuilders. Yes. I remember, Erica. I remember. I haven't got a lot of people in my thing, but I've got a great group of people, and I want to remember them anyway. I remember, even if we have little conversations, I try to remember you. You guys remember Erica? Good morning, Amardeep. So your business is going well? Busy. It's the best way to be. A couple of bodybuilders don't just sit around, eat bonbons all day. They get out there, busy people on the move, staying fit, starting businesses, that kind of stuff. So that's good to hear. Way to go, Erica. Yeah, the core group's grown a bit since last year, Erica, but we've got some, we got a PhD in here now. We got a real smarty pants in here now. We got some really good people in here. So yeah, the core group's got a little bigger, and we've had some fun. I've got a chance to meet some people. I've been down to Albuquerque, met my buddy Abs down there. Toronto a couple of times. We've met Hadi and Reza and Amarjeet, and Russell popped in. He flew in from the States for our last little summit we had in Toronto. We had my first meeting there was 2 guys. Now it's 4 guys, and it's getting good. It's getting fun. Doing lots of traveling, lots of exciting things are happening. Good morning, Craig. The crude rally. Have we got the crude rally? What have we got for crude? Where am I missing the did it take off on us? Like, what the heck? Mine is not registering anything here. 15-minute, 4-hour. I got nothings. Am I in the wrong one? That's November. Yeah, I don't have anything on mine. It's not showing up on there. So, where are we at here? I'm in the middle of this small little range here, so still targeting this upper zone here, this premium array 284. That'll be right in here for the 5-minute. The 15-minute will be just below that at 276 to 283. Five guys, you get. Five guys, you get the burgers, that's right. That's right, your daughter was heading off to university. It was kind of an emotional time for you. I bet she's having a grand old time there in university studying now, hey? Z contract. Let me just double check, was I on the Z contract? That's probably why it's not. Suddenly there was life. Craig. Thank you, sir. All right, so here's our situation with oil on a 4-hour level anyway. So what you want to see here this morning, Craig, is I want to see this come back down into this level right here and stop. This is an institutional order flow entry drill. And you want to see a continuation, or I want to see it come back and just tap this one more time. Because if we end up getting above this level and then come back through that mean threshold, we're coming back to revisit this. So I'd like to see it get visited first before taking this high and using this. I guess you have to look at this one here. That high gets taken on the 4-hour. Use this as support to go higher. You're targeting this zone in here. So you'd be looking for the premium box inside this range. So if I was doing a box-to-box trade, I'd be looking for something like this. You're already in there already. That's why I want to see if we hit this and then it rolls over and comes lower. Get some sort of reaction off here. I don't want to see this fill in. I want to see this act like a breakaway. Just come down, give it a little tap and then leave. So look for the lower time frames to see if there's a nice reversal opportunity here for a range extension continuation model to finish off the rest of this BISI. And then we'll look for another range extension continuation model after we break this high here. So right now we're in the middle of that larger range, and all eyes are on there for me for the 4-hour. So the 1-hour, if that's our objective, let's look at the 1-hour and see how that's lining up for us. So we have a low taken here. We have the SIBI. We have a break above the SIBI. We have a retest of the SIBI. So on the hourly, it's working. 4-hour, it hasn't quite tagged the SIBI yet, but the SIBI has already been hit here. Looking for range extension. We got the range extension. We want to see just a institutional order flow entry drill, or at best just a retap of this graded response. We're talking about a graded response here, no more than the mean threshold. So you get the mean threshold of the BISI and then the continuation. So I want to see this get taken. In the hourly level, we're nice and bullish. Okay, 4-hour, just remember, if we lose that premium, or it's not premium, if we lose the bull trap and we take the mean threshold, look for a revisit of that 4-hour SIBI that didn't get a chance to get tagged here yet. So the crucial factor is making sure that the bull trap would be, I'm going to go with this one here. We close above that. Let's wait till we get a nice little close above it and see how we act. We see a couple of wicks, and then I'd love to see that come back. So just keep that area open right now. An idea, this is a nice breakaway institutional order flow entry drill. So far it's being supported. It's being supported on the hourly level. You want to see it really start to get some legs here. This waffling around, not what you want to see. Right now, we're just trapped right on this mean threshold of this candle here right now. The largest up close candle, which is your breaker that breaks these little lows here. This last up close candle's mean threshold is right where you've hit and you're frozen on that. And now we're backing down. So you really want to see this punch through this premium level on the 4 hour and then start running. Oh. Get some steam there, Craig. Lucky Star, we've just been consolidating all night. There's it's very low time, small time frame hunting. There's nothing to really, you gotta wait for hourly and 4 hour to break out of there. Otherwise you're just hunting small little internal range liquidity. Like highs is a bit ridiculous when you're stuck in a tight consolidation like that. You have to wait for the breakout to occur and then start looking for some momentum. Otherwise we're just back and forth inside that consolidation. So capitalize on the lower end of the consolidation for reversals that take out small little lows, and then hunt for premium levels inside consolidation. That's my advice for what it's worth. So if that mean threshold there gets taken, then we're looking for a retest of down in here. There's a little imbalance down here. You want to see this hold here. And we've already traded right to it here, slightly below it here now. So your line in the sand is the mean threshold of this candle. Your stop loss would be sitting down there. You have to ask yourself, what's your rule for this? Do you have a rule for that? Does that even enter into your thought process? My rule is, as soon as you break the 50% of that, which we have, get out of your trade. Wait. Because this could be just consolidating here. Wait till you get the open. Let's look at Bitcoin. What's Bitcoin up to? Look at that big stab down here. Cleared out all the liquidity. It's taking out the liquidity above the market, below the market. In this little consolidation, it's consolidating. It's a 15-minute chart, so not much free there. Natural gas, let's go, baby. Get up there. I want to see that gas take off now. Like any good gas, you want to see it leave the area. Leave the area. Real estate, egads, we're back up into here. This is probably potentially going to run these lows out now. Put our little carrot on the sidelines. Looking for a run up into here. So I want to see this kind of rejection. I want to see this hit this breaker. Get a small low here. I want to see it just hit this, roll over and come back lower. So you're going to stay inside this SIBI as a rejection zone. And then I want to see it start to drop. It's going to close back below here. come back in, retest it, and then look for range extension, and then continuation model after we take out that low. Little piggies. That's October contract. Maybe we should get into a December contract and see what's going on. That might look a little better. It's looking good. Finally broke through that high right there, retested it perfectly, sent higher. That's the range extension. Now you want to see a continuation model. Half that order block. See the half? Hit it, reacting off of it, takes out the highs, pay yourself, move to break even. As soon as that high's taken there, pay yourself, move to break even. You got a risk-free trade in coffee now. That is the continuation model right there, right on the Beezer. That's the continuation model. So there's got those 4 models we talk about, right? Every morning I talk about the same 4 models. You just gotta either understand the rules behind them and forget about the emotions attached to it. Just stick to the rules. Stick to the rules. And if you don't have a firm set of rules around your trade plan and you keep getting taken out, then you know why. You need to modify your rules or get a better plan. So look where that went. This is where we were looking for yesterday. See, we're all just chopping and you got to wait for it to break out of here. Then all it do is just stay in that lower zone. And then finally, if I pull these out, you'll see why these levels are still important. Look at that right up inside here. This is the manipulation or this displacement you want to see after this consolidation. Big firm displacement. Then typically you'd want to see a entry back into the SIBI that's created here. You want to see an institutional order flow entry drill. You didn't get to see that. We've traded through that 15-minute inversion. That inversion, same as this one here. Once we've taken the inversion out, we want to see it supported. If you don't get that and it takes out the next one, you want to see that get supported. So you see it's taken here, trades back into it, and then goes lower. So that's the, this is what we were looking for. The retest of that one didn't work. So this would be like this, which is what that is. So what you saw there is what you would now move down to here, provided you get a big long run like that. For continuation, you got to look for your next entry. You got to stay in it on the way short. You say, well, how do I know it's not going to go there? You don't. You trade that model, and if it trades through it on a close, then you close that out, and you expect a deeper run back into the range. Anyway, that's how that happened. So I want to see this now close above here and reclaim this breaker from above. If we can get above that, come back down on top of it. I want to see this hold price and then start running for these highs, get back into that range. If we take out 133.13 on a close, come back, you just want to see it retest this SIBI, or not SIBI, this bearish breaker or bearish candle and this bullish candle. You want to see there close and open to get retested and go lower. That's if you want to go short. Otherwise, I'm looking for this to break out, retest this, and then take the high and start coming back into this range a bit higher. All that's untested, right? So typically you want to see it get retested at some point. That's finally comes up here, gives you your institutional, what we were looking for, the institutional order flow entry drill, or a retest of that level that we are looking for a drop down pop in. So these become kind of important levels for me. Once we get above that BISI on the close, come back, retest that using the BISI to push through the mean threshold, rejection block, and continue pushing higher. Let's look at we have an immediate rebalance, retest, go higher. You want to see this accelerate through the mean threshold here now and take out this high, use this candle as support, and we're targeting right here. This would be my upside target. Once we take that mean threshold, see how we've come back into the mean threshold? We hit it, a nice little reaction off of it. We're right back into that immediate rebalance now, discount area. Now you're looking for it to punch right through here. Get on top of this and then hunt for here. Then you look for this. So that's an internal range liquidity hunt. And then you're looking for range extension and then a continuation model after that, hunting for the next upside objective. So that's where I'm headed. All the time this stays open, that's a good thing. Morning, Derek. Oh, you're very welcome, my friend. You're welcome. I'm visiting my uncle today, who is nearly his introduction. Nearing his introduction to his maker. He's not prepared for it yet, though, so I hope I have some hope to offer him. Oh, much love to your uncle, my friend. It's tough, especially in that portion of their life where they look back and still want to keep going. Yeah, focus on all the great things they've accomplished, the great things, the love they got around them. My thoughts are with you, my friend. I hope your uncle finds some peace. Shepherd, good morning. Google for spiritual laws to read him. Cool. I know them, learned them in Bible college. Thanks. Maybe it will give us the equal lows before we have to go deep. Yeah, look at this. Well, the euro's got some punch against the pound. So I want to see this. If we're looking at this from a euro British pound perspective, you want to see a portion of this stay open and just use this candle's mean threshold right here. See how that little tiny mean threshold, you want to see that hold price and start heading back higher. Take out this SIBI here, find some support of that and start running out these equal highs and run for the rejection block here. So I'd be looking for that, half that, the highs, and then you get the relative equal highs above you. That's a nice little displacement consolidation. Good old breakout, come back to the highs and use that to leverage higher. You don't want to see this filling in now. You don't want to see it come all the way back down to this little tiny consolidation down here. Got a lot more jam in it if we can get above that BISI here. What else we got here? This is looking good. Let's go, boys. Get a big tear going on here above 1064. This is good. Still in this one. This one is 20%, and it's up 26% so far. So that's like 46% in 1 year if it stays up around there. That's a good old stock. This one plays like 12%. And real estate is one of those things there's always a lack of housing. So small ranges to play in. That's a good stock. TD Bank. Bank of Montreal. You're narrowing or zeroing in on that no-go line through it. And we look at how much we pulled off of that premium level. We just came right back into it and snapped off of it. And now we're starting to poke into here. Premium level. You want to see Nova Scotia hold on here. There's your no-go line right there. So they're still good. Laurentian's already through its no-go line unless you're looking at this discount range here. You're willing to give up 10% or more to see a market structure shift. You see it right here. It broke through on the downside, came back, found support at it, wicked through real quickly. But you're working inside this level here now, this little swing. So you want to see no more than that bottom out right there and start pushing back through this level, find support at that, and then start eating into this wick again. Otherwise, if that starts to roll over right here, we see it trade through there and come back into that, we're looking for this price imbalance on the daily below us. Royal Bank still holding out, refusing to give up. Same with Toronto and Dominion. Good Disney having a little push now. Bounce right off of one of our levels here. This imbalance is what I've outlined here. Nice bounce off of that. Back into that 4-hour inversion. I got nothing for Disney. It's just too choppy for me right now. Silver nailed our 4 standard deviations. Came down to 3. Right back into our imbalance. Short from here. Now looking for this low to get taken. So there's a small BISI here. You see this? We've traded through it. We've came back to it. So we're expecting to see the continuation. So the fact that you opened here, tested that level, got short. As soon as you break that low, pay yourself. Move to break even. You always take the most recent swing low, or the most recent low candle below you. As soon as you take that, pay yourself. It's no different than doing, if you're doing a daily candle. Oh, this is a daily candle. If you've done a daily candle, you always tend to want to reach for the previous day's high or low. It's the same thing. So whether we do it on a daily level, whatever time frame you're on, why aren't you still using that same rule on whatever time frame you're trading on? So anyway, that's my philosophy. If your rules are right, they should be fractally right. They should be fractally right. In other words, all those rules that you apply on those higher time frames should apply to the lower time frames as well, if the markets are truly as fractal as we believe they are. So now a retest this high, look for that. So here's the confusion. Remember I was saying my rule was if I lose the mean threshold of that candle, you also have to, and I would have been out. So I said my rule was I would have been out the moment he traded below it. But see what the candle you're in, you're overlapping this candle and this candle. You say, well, what is this candle allowed to have? It's allowed to have its mean threshold, tapped support inside this breaker, that mean threshold. Now if I take, this is where my rule needs a little finessing. There's, of that whole breaker, if you use just the wicks, or just the bodies I should say, there's the bodies. Didn't even hit 50% of the body, right? And we're inside this candle, this bearish candle as well, so its mean threshold needs the whole price, so I should have given it a little bit more wiggle room. We'd still be in that for a long. So I see the logic that I just can't stick with that only candle, or I can and just say, well, you're going to miss out on opportunities like this, so you have to wait for a retest of this candle now. So now there's the retest. You don't want to lose the mean threshold again on the close. Now you can go along. We're looking for this objective here. So what does that look like? If this is your target, this is your entry, look from the lower time frames for a swing opportunity. So watch here. Inside this range, 50% of the range, we have imbalances here, and we're eating through those already. So look for this retest down here now. So you're going to take this in a wick. Let's look for this little area right here. Now you're looking for any opportunity to see a little reversal go on here. Right here, all these little swings have been taken, change in direction. We're still inside this breaker. So watch right here, 38 seconds. I think we're going to come back here. We violated that 50% of that. Thanks, Steve, for all your work and analysis. I'm learning slowly. You're very, very welcome there, Craig. Tag the premium box pushing. Thought you were going to Thailand. I am. Today. We're just arranging support for the house. We've got people coming to stay, and then we're heading off. Won't be for a while though. Today's our last show, and then we're gonna go to a little on the road action. That's what we're looking for. So watch for this little box down here first. And the reason I'm picking this one and not saying we're continuing is because we violated the mean threshold of that candle, and this opportunity didn't get retested yet. See that? Body broke above it. We didn't get a chance to retest it. So I'd like to see a stab down in here like that and see if that gets used. And here's our open. It's definitely getting used. Used and abused. There's the premium in the 15-minute. And now we're running through this mean threshold on a 15-minute. So forget that idea up there right now. See how we were looking for this to go long here? And then you look at this and go, no, we violated that. We're looking for this. So wait, we still don't have a reversal yet. So good thing you don't get in. It's like saying, I'm expecting that to be the low. You want it to be the low. So look, confirm, go down to your lower time frames and look for your entry. Now we've ripped through this discount array. How's yours doing, Derek? Is yours running for the that we're running for our little watch here line already. That mean threshold, look at that, how delicious that little one is there. See how it's just staying, the bodies are staying on it? Nice. Now you want to see it pop up above here and head for that premium box up there. So if we take out all these little lows here, again, you're looking for your continuation. Institutional order flow entry drill, yes or no? Big discount. Retest right here. Come back, just give that a little pop higher at 229. $229 to 233. See if this area holds here. Institutional order flow entry drill. Pay yourself at that low. Stop loss would go right there. And now you want to see that. You don't want to see it go back up there. Now you want to see it just start ripping. If it doesn't, it's going to revisit this box. This one's been validated now from below. So its mean threshold's been ripped through once. So I'm expecting another little run up here. So you quickly you can get, if you take an institutional order flow, you pay yourself there, move to break even. Now you just wait and see, is this going to pan out? If it doesn't, no, you got a little bit of cash, you're zero risk. And you want to see it accelerate, right? You don't want to see this waffling back and forth stuff. There you go. And you're really quite happy with yourself now, right? So now move down into a little bit more deeper profit and start targeting your next downside objective. Where is your next downside objective? Let's look on the hourly here. All right, next hourly objective is 153. Split your BISI in quarters. Look for 50% of that. We could just get a simple run down here and pull back into the range. So 50% of that. Look for 75% of that, which would be this old high here. And we'll see if that stays filled in, or we're just going to keep running, filling and filling. And you got a nice little institutional order flow entry drill there, as we explained. 153 indeed. A D 153 indeed. There's our first presentation for value gap on the 1 minute. So if we retest these lows, it's right inside our first presentation for value gap for continuation to 153, unless we run straight to it. So Always look at these new SIBIs. As soon as one gets broken to the upside, we're coming back inside this range. There's the retest. Do we get to retest the low here at 207? Another institutional order flow entry drill. So the important thing now is to watch how the bodies act inside here. If you get the few wicks up inside here, watch how the bodies, see if the bodies stay on the bottom half of the first presentation. Let's see, this is a nice institutional order flow. You want to see that continue rocketing down now to 153. And then after 153, you get the full closure at 133. The S&P is not making a... The S&P has not made a lower low yet. So we are in a 1 hour SMT. It's made a low, slightly lower low from here, but it has not taken out this. This candle has not been taken on the S&P. So next hour, I'd imagine that's our first indication, Ollie, if he's around. So watch here. This could be our turn point. We want to get up on top of this. So you've got this small little range. Here's our bull trap. Watch carefully on your bull trap, and let's just watch to see if this inversion holds price. If the bull trap gets run through right away, look for the bull trap to provide support to keep going higher. If it eats through the mean threshold, it's coming back to retest this. So now we've closed above it. Look at that. You want to see it tap it. It's not tapping it, it's leaving. That's that other zone we're looking at here is the go, no go zone. That's the go, no go. You want to see it get up on top of that as well. So come down, give this a little tap, watch where the mean threshold comes, and then if we don't, then we're looking to climb up on top of this and use this as support to run higher. And I'm targeting breaker and BISI. And then you could see another change in direction and a retest of this, which has not had an opportunity yet. So if we run straight for this BISI and see a reaction off of that, look for a retest in this one down here. So I'm going to see that. There, we see how we just came down and kissed it there. Good. Now you want to see it leave. Get out of dodge now. Get up on top of here. Pay yourself at that high. If you entered in there, pay yourself at the first high. That'd be no different than paying yourself at the daily candle. If this was a daily and you're running up, pay yourself at the high. That's what we'd be doing. So pay yourself, move to break even. You're in a risk-free trade now. And let it run. So we're not worried about 153 just yet, Hadi. Switch your thought process now. We don't care about 153 right now. We're in a change in direction, and we've had a market structure. We've now in a market structure shift, but right off that bull trap, that's a perfect little play right off of a bull trap here. Came back, gave it a little kiss there, and left. You've taken a small portion off here. You're at break even, and now you're heading for breaker. The next little, sorry, there's one right here I'm yet to tag. The next little go, no go zone would be right here. Oh, my mouse is just getting, I gotta fix my mouse. Right there. They include, so let's put them all together and we'll get rid of this guy. Come back to revisit that area we talked about. Once you get above it, come back, find support at it. Got a hold price now, can come back and tap our high. Again, mean threshold is what we do not want to see get broken. Otherwise, we're revisiting this. Now, see how this is acting in here? Ideally, all you want to see it come down is tap the top of the wick like that and then leave. You don't want to see it start to drive all the way through to this candle. It drove all the way through 1, 2, 3, 1 candle wick. So we could be retesting this. Body's still respecting this go no go zone. We're still respecting the consequent encroachment, so we're still inside here looking for the premium box. Premium box is up here, sorry. This is the next no go zone right here. Pay yourself at the lows, the breaker. You're hitting that now. So internal range liquidity, if you're using this as your take profit model 1, take profit model 1 would have got you a dandy little run here. Take profit model 1 from there to there. You would have been catching it at a bit of a premium here. 62%, 70. You would have run up to 75% before it took you out at 70. So now you just sit and wait for premium level to get hit in the higher range. If you're using the higher range with the premium inside it, then 75% is right there. You would have been taken out right there. It would have came back. If you would have got 70%, paid yourself there, and then would have come back and took out your stop loss right there. If you're using take profit model 1, if you're using take profit model 2, you can't. You could only run for here, take that and say, I'm aiming for my premium box, which was just hit right there. So take profit model 2 would have been, it's usually box to box. But if you're not taking the box here, then look for a retest of that high and then aim for the box anyway. So that's the tag. Now, if this reverses inside this range and comes back, guess where it's targeting? So what you want to see now is pop through this level, range continuation. So now that we've tapped it, you want to see if this reacts off of here, pops back through this no-go zone, gets underneath it, and then starts attacking this candle. Does that make sense? You know, Reza, when we were talking about this, and Russell, when we were talking about this in TO the other day, we're looking at that first candle to the left, right? If we break the high of it on a close or an open in this case, come back, retest it. Look at, that's where you're looking for your continuation, right? Inside the range. So now you take your internal range liquidity model and you pick 1, 2, 3, whatever you want to pick. If that's your box to box trade, there's your box. Now I'm looking for the next box down here. It didn't get a chance to get revisited. So now I'm looking for, do I see a 15-second reversal here? See, you hit that? There's your reversal, traded back into it. Now I'm looking for this to continue going lower. If we break through that, then you're on the wrong side of it. It's going to keep going higher. So watch right here. The ideal place is right there. If you're wrong, it pops through, it comes back, gives you an opportunity to break, take your trade off and wait for a change in or a market structure shift. So right now we're in here, box to box. So there's your premium box, there's your discount box. We break through the breaker and we're starting to head back down to the area down here. So internal range liquidity is right here. So look where that, even if you're doing a 15-second internal range liquidity hunt, you have to be above the premium. So there's the premium. We drop below that change in direction. You trade back into it above the premium. So you're buying it at a premium and selling it, or selling it at a premium, buying it back at a discount. As soon as you hit 50%, so you bought in here, rolled over, hit 50%, move your stop loss to break even plus the cost of the trade, take half your trade off. You hit 62%, take another 10% off, you move to 50, and it's probably going to come back and take you out right there. If it doesn't tap it, you're still good. No, right there, you'd be out. So 60% of your trade would have been off there, and the last 40% would have been in profit as well, just for an internal range liquidity hunt on a 15-second chart. Then you wait for a market structure shift. That's a quick internal range hunt on a 15-second chart. So now you just go, oh, what if it continues? Well, good, that's what we want. Wait for this to break through here. Then we switch over from an internal range liquidity model to a range extension model, and then a continuation model, hunting for the downside objective. Those four models, and all their little rules will get you every direction in a chart. We're above this candle. We get above that one. If we break above here, we're still going higher. We don't get a chance to get back here. So don't marry an idea that it has to get back there. I'd like to see it get back there, so we just need to see proof of that. If not, stay on the horse. Because if you're looking one way and the horse turns and bolts, you're flipped off the back. And you're like, why did it go there? Well, it's showing you. If we break this level on a close, which we just did, tap, now go higher, look for the rejection block, hold high, and now we want to get back up on top of this one. If we trade back through that level again, you're in a consolidation. Wait for a breakout. See how we're even wicking through that? Not what you want to see. So your sidelines, now you're waiting because you're stuck inside here and you're stuck inside here. So until you get a breakout above there now watch. It's the close of this candle. The bodies are still respecting it. So it just wicks, did some damage. They're back into this order block here. So you want to see this hold and keep pushing higher now. Bodies are still respecting this little bissy here. Watch the rejection block. Bingo. Hit. Look for the next push higher. Get through this level here. This is finding support. So I wouldn't want my, if you were long right there, I wouldn't want my stop loss to get, I take it from wherever it was below this candle here. Now you're moving it to below the low here. Now you've taken the high, move it to break even. Pay yourself at the high. And now you're risk-free on a 15-second chart going long. See how the mean threshold held price here? Now get up on top of this and look for range extension and the continuation model. Good morning, Hans. All the best to you and your uncle there, Derek. I'll chat with you guys from the airport. I got 2 days of traveling, so I'll chat with you in Telegram. There, see how now we've traded above that high? Look for a retest of this candle and here. So I don't want to see any more than that. I'd like to see that stay open, really, and keep pushing higher. There's the equal highs. If you haven't already paid yourself there, pay yourself. Or at least move to a little higher, your stop loss up a little higher to the next logical area you want to see supported, which is this area right here. So I'd be like just below that BISI here. So lows were swept quite nicely. Pull this right here and look. If I go here and I go equilibrium, look where it hit. You see why those levels, when we talk about inside of BISI, you take this and break it into quarters, why those are still significant levels. And look at that, right perfectly on the 50%. And the reaction off of that on the hourly chart. So as soon as you see it hit these levels, you start to go into the lower time frames and say, is there something down here? Do I see a reversal going on? So that's right down here. You don't see a reversal till we break here on a 5 minute. So not interested in that. On a 1 minute, you see your first presentation. So there's the turn. It's the 9:10 turn on your TIBs. This is right at around 9:30. And our entry's here. So of that 50%, your first entry that you can catch on a 1 minute is here. Let's go down to a 15-second chart and see how close to that 50% we could get. Oh, sorry, let's leave that on the hourly. I'll put this one on the 15-second chart. We're looking for this area right here, right? So we're looking for this swing here for any opportunity to catch our reversal. We have a order block to the left. As soon as we break that with a up close candle right there, we come back to its mean threshold. We don't want to see that get taken. See, we had a body break above it, and we come back inside it, we go higher. Let's say you're looking for the reversal model first. I'm looking for this level right here. The very first, oh no, we're right here. There's your first SIBI. So our reversal model is right here. Just so you're aware. Our first reversal model is here. So I see this and I say, if I can get a body traded above that and I use that as support, I want to see that used as support to go higher. And keep in mind, you've got this big bold candle sitting right in front of you too. So the body breaks above it. We have this one close above, then swings below, wait for a structure shift. If you're using the rules precisely, you're saying mean threshold can't get broken. If it does right here, you say, I'll wait for market structure shift. So market structure shift happens right there. Tap it. That's your entry. So our 50%, our best entry is right there. Right there. So all that, you don't get your reversal until you see that. If you're following the rules specifically as I lay them out for order blocks and little swing points. If the high little swing gets taken with a body close, and you can retap it, and you're looking for higher prices. If you're saying, I want a better market structure shift, I want to see this one break. Breaks to the upside, we come back inside it, we give it a little tap, and then you continue going higher from there. So inside this, you've got a SIBI that's broken. You don't get an opportunity to tag it, so you're looking at the mean threshold of this candle saying, I don't want to see that broken. If so, this is going to get retested. It didn't. It held and kept going higher. So that's your hunt. As soon as you see these higher time frames hit objectives you're looking for, you start hunting on a 15-second chart or 1-minute chart for an opportunity to get your long. And on a 1-minute chart, it was way up here. Does that make sense? So that's why we use the higher time frames. And you say that's a perfect level I want to see. Find support, and I'm looking for it here. Do I find a reversal here? No. Do I find a reversal at 25%? No. Do I find a reversal at 50%? Yeah, not till it got back in here. Now I'm looking for the continuation, looking for the premium box. Back on the hourly, where's my upside objective? I'm looking to target P1 and P2. And you've got P1 but not P2 yet. So we broke the high. Change in direction on the lower time frame. We're trading back into it. See how we've traded below that level now? We've swung above the highs, so you look for your first busy. We've traded through it, back into it. Now I'm looking for a run back lower. Keeping in mind, this area that never got tagged, and you have to get this market structure shift here to start targeting this. So now if this closes back through here on a close, then you're going to wait for a shift above or below or above this. Because now it's just plain silly buggers inside here. There's nothing in here. There's no SIBI down here for you to go from box to box. So all you've got is the breaker. And its mean threshold is, if I just use the bodies, it's right there. If I use the wicks, it's down here. So this breaker is still holding price. We've got the change in direction here. Bodies are respecting that. So it's heavy inside this small little range. So you're looking at the mean threshold. This candle's got to hold. If you're looking at the last candle, this one right here, there's a small little BISI right here. I'm looking at the high and the mean threshold of that at 244 is your line in the sand. Were you just denied, Russell? You were looking for 290, were you not? You got 289.25. It just denied you that last little poke up in there. But on the hourly, you got P1. You were looking for P2 up here at 92 to 98. You still might get it. Right now, we're just heavy inside this small little range here. So stay inside on the horse, stay inside the ranges that you're in, and say, when do I have range extension? When do I get continuation? And what am I hunting for next? It's a rinse and repeat model. That's what it is. 4 basic models, not 8, but 4 basic models. And you should be able to manage all directions in the charts. That's back into Chopsville again. Premium box has been hit. There's no discount in there though, hey? You got to get back above 284. Overlapping arrays. This is the resistance level. This is the resistance level, and this is the support level if you want to get up on top of here, but you're still inside the. So you got 2 against 1 here. This turns into support. The moment you can get above this, you shut that one down, and that one becomes on your side to go higher. And then once you break the mean threshold of that candle, this one breaks, and now all three of them provide support with the mean threshold to continue pushing higher, running for these equal highs. So reclaiming the breaker from above, see that? Once you break it to the upside, you come back and reclaim it. So if I take this little breaker right here and I just go from there to there, reclaim the breaker. Actually, it broke it here, went through it, mean threshold, above it, found support again. Watch this mean threshold give way, and then watch right here. This one traded through it, we came back into it, now you're going higher. Look for the 5-minute high, and we're still targeting this level on the 5-minute. Choppy, man. What is our this is looking to run lower. You've got broken support, broken support. So I'm looking for this to come lower. Maybe it's going to finally take a run on its lows here. They got relative, you had equal lows below you, so looking for a run on this liquidity and hunt for here and back to the old 67.50. This found support. That was broken, finding support all the way up into here. This candle's half its wick. Look for a run lower. Oil. Craig's finally caught his little oil run. This is looking good. We got a body above here now. You're targeting the rejection block next, which you've hit already. This one now becomes important. You don't want to see its mean threshold get taken. Now you want to get on top of this and use this big old candle right here as support to push higher. And then you want to see it really accelerate through here. Clear out all that. That's been worked. That's a cam 2. If you close below that, looking to go lower, this is just a quick run on liquidity above. So cam 2, no more than that on a close. Yes, yes, keep going. You want to see gold get back above here. This bull trap, you want to see this bull trap break to the upside, and then you're starting to target this objective up here. This is the place you want to see it hold price, roll over and come back lower and take out these lows. Broke through it, back into the mean threshold, broke through it again. It's the second one into that breaker. The breaker's given way. I'd like to see this get retested down here. It hasn't really been enjoyed, so I think if we can get through here, I'd like to see a target down there. The four basic models are reversal, the reversal model, and then your internal range liquidity hunt. You use one of 5 take profit models. I have the 5 different take profit models. I've only shared 4 of them with you guys. You can't use, well, I guess you say you can't. You probably could use take profit model 5, which is using the whole range to stay in longer trades. It's a little more complex, but don't worry. Don't even worry about take profit model 5. Just the first 4 models is fine. And then you have so that's your box to box. The next model is range extension. So as soon as you see a body break above the premium box, range extension model is this. This is range extension right here. So we look for the body to break through that, come back, tap it, then extend the range. Small little run, right? That's model number 3. And then the continuation model is if you see a body break above here, we look for let me show you a continuation model. So several ways you can look at, you can have a continuation model. If this is your breaker, we've broken market structure to the downside, you look for your first fair value gap that breaks market structure. Look for an institutional order flow entry drill. Look for a retap of the old low. Look for the order block. Look for the rejection off of the rejection zone, so to speak, whatever that little civvy is that's broken on the downside. That is used as a continuation. Once you have a range extension, you look for that level to get tested to go lower. Either the low all the way back into the civvy. That's the continuation model. So that's your 4 different models. So you get reversal, internal range liquidity, range extension, range continuation. Those are the 4 models. And there's a lot of rules around each one of those. So you got to adhere to the rules. If you don't, you'll say that the models don't work, and it's not. It's that you're not following the rules. Those are just my rules. I've got my rules around it. That's how I know they don't work, if you don't follow the rules. And if you follow the rules and it doesn't work out, let me know so I can tweak my model or I'll need to re-explain the rules to you. You will have missed a very important rule somewhere. So far, I want you to prove it wrong, not prove it right. We're going to tighten the screws on it. As you can see on that one I did, where was it? I can't remember where it was now, where I was saying if it broke the mean threshold of a down close candle, I think it was in here. Where was it? Back there somewhere. I can't remember where it was, but anyway, when we coming back down on top of it, and I said, oh, like if you break the mean threshold of there, like it was just slightly below it, and I said, okay, that would be me out. Then you wait for it to retest, so then you wait for your next model to set up, and then it went higher. That's the rule. That's the rule. That high, that spot right there. I think this was it here. If you get a body break through it, then I'm out. It range extends. You think, okay. Range extension model, it continued, it extended the range, and that means by just poking above that high, and then it fails if we lose the mean threshold, right? If that mean threshold gets taken, then we're looking for a retest of the area that didn't get a chance to get, like the SIBI that's below it. Come back inside it. See right here, body trades above it. We're looking for a continuation model now. So once this high gets broken, we're looking for the graded response, A plus, continuation. It continued, and then you wait for the reversal model. So as soon as that body gets broken to the downside, we have a reversal model. Trades through it, comes back to it. Now we have a short. Right, and that's the problem when you're in these little tight little ranges. You've got to be watching for all the little imbalances, because that's the reversal model inside that tight little consolidation after you've had the run. So reversal, trades back to it, taps it short. Now you're going short. You're trading box to box. So that's your reversal, box to box. You hit it, you drove right through it. And now you look for a continuation or a range extension model continuation. Well, you did all in one candle. So if you're short on that and you're targeting for this, you're starting to pay yourself on the way down, and you leave a piece on to run. You made more in that run down on the last 10% than you did on the first 90% from box to box. Once you've got you into range continuation, you wait for a range reversal model to close that trade off, which is also a take profit model 3. If that makes any sense. It will if you understand what take profit model 3 is. Does that make sense, Sticks? See that level we talked about? They're not leaving it untouched, man. I tell you, if you see that reversal, look for them targeting this area that never got tested. That, you don't like that, so you got to wait for a market structure shift, right? So here's your shift below this low here, or wait for a market structure shift below this little swing point. It takes it out here, comes back, gives you a perfect little opportunity to go continuation back into that range. And there you go, fully done and dusted all the way back to this little fella right here. Well, let's draw him all the way out to the edge. Him, her, he, she, it, whatever. Sorry, that's supposed to be right down to there. Look at that, right to the pip. See, we broke above it. We didn't get a chance to retest it. Broke above it. Didn't get a chance to retest it. Broke above it. Just barely got a chance to test it to go higher. It had intentions of going higher. Went through range extended, but did not continue. We did not have a continuation model here. We just had a range extension model. And then we say, as soon as it breaks back through here, I'm looking for a continuation and a run back into this range. You have to get market structure shift to follow through with that, or wait for a new market structure to swing over here to break through it, right? So we traded through it, and then you went above it. So now you go, I got to wait for a swing, this swing high or this swing low to get taken out on a close. There's your close. You come back into the premium portion. Ideal entries to say, I need to go here. Now you see how it's still closed above? If it's a rule, also it's not. From here to right there, you have to include the imbalance as well. So that literally came right up to your imbalance. Your ideal shorts there, because if it goes higher, then it comes back, retaps it, and continues going higher, you could get out at break even, but that would be the most ideal place right there. Short, aim for your target, rejection block, hold low, takes out the next low, and then we're targeting for that untested liquidity all the way down and nailed it perfectly here. Beautiful. Now it says, now you can go higher. Now you can start running higher. Watch this level right here. Get up on top of this, and there's our bull trap that we're aiming for. Internal range liquidity on. Now you're going into, as soon as we can get this, that'll be our reversal model. So as soon as they get a close above here, we have a reversal model, internal range liquidity model, break market structure to the upside. Then we're looking for continuation. There's our premium box, discount box inside this range. You have to include this one because that's where the premium's sitting. As soon as we get through that, now we get back at the old on top run, look for range extension, and then the continuation model after that, which is we want a fair value gap to occur, and then a graded response from there. That's typically how the extension model works, is we look for a fair value gap to occur above an old high, and then a graded response from there. And you have the A plus, A, B, C, and the D, and obviously the fail. The fail would be, obviously we'd be getting back through this thing again. So there it is right there. There's your entry for a long. That's the reversal model. Right here, body trades above it, retap it, going higher, pull your fib tool from the inside out, from here to here. As soon as you hit 50%, pay yourself. There's 50%, you pay yourself. So you entered in here, pay yourself there, hit 62, pay yourself there, move to 50, you're out of that trade. That take profit model 1 is done. So if this reverses and goes down lower, you're going to see why take profit model 1 is a great way to save your ass in a trade. So that would have been 60% of your trade would have been off there. And the last portion would have been just above your break even, which was 50%. And you would have the last 40% out there. And now you wait. So now you say, I want to see this run through the premium level. This unfortunately went right to 62, came back and took you out. Oh well, just wait. Just wait. Is that a bull flag there? It is. Look at that sneaky little sucker. Wait for this guy to get taken on the upside. Then you're starting to target this area here again. Let me pull this down to here so now that becomes our new important. I want to see level. Let's use that little box. Watch this one right here. So all the time this is holding. So ideally you want to see it, another nice little entry right there. This is buffering now. If it trades through it on the downside, it comes back to it, close your trade, it's coming lower. It didn't tap it, but if it tapped it, that's a long. And then you start doing your 50, 62% again on the inside. This is the bull trap right here. It's a little skinny little fella hiding in the weeds. We have the bigger one up top. This guy's right here. First bull candle to the left of your inversion. So there's your entry. Now I would pull that right into break even. I wouldn't want to see that come down there again now. Nah, you'd be out. Wait. Because I didn't like that wick. That's why. You want to see it just tap it like this perfectly and leave. Otherwise, shenanigans. Here's a bull or a BISI. We've just come back in and tagged the BISI. Now we're going through it. You watch it enough, you'll start to see when it's panning out for and when it's not. That little bull trap held. I didn't see that one there when I had it sitting like that. That's a bull trap. You gotta wait for you to get above it. So you got 62% of the range. You paid yourself, and now you move to the sidelines. And if you're on the wrong side of it, at least that take profit. Russell, Reza, when I was talking about the take profit model, one, when you're a beginner just starting out trading internal range liquidity, it is the best model to use to save your ass, because if you're on the wrong side of it, it's paid you and you've moved to break even and you've protected your assets. So exact example. I'll just review that again so you understand why take profit model 1 on an internal range liquidity hunt is the best way to save or protect your money. So if you're looking for this to run, there we got above 50% and you broke above that high. You came back inside, so now you're long here. You get to 50%. The rule is move yourself to break even, take a portion of your trade off or half your trade off, and then it ran right to 62%. Take another 10% off and move the rest to 50%. Then it comes back and goes poof, takes you out, you're done. That's it. And now it's, see how it's moved, it traded below it, it's come back into it now. Now we're looking for it to go lower. So if you were going to go long there and it traded through it, came back to it, there's your, you get a chance to take your trade off at break even, and now you get back in sync with the market going lower. But a great model, take profit model 1 is a great model to save your ass and get you some liquidity, even if you're on the wrong side of the market. It ends up turning on you. Well, that's why we see the reversal and we say, I'm on the wrong side of this. I'm on the wrong side of this. If it breaks there, that's the rule. Breaks through it, then we're looking to get back in sync with the market, looking for rejection block, half that wick, and then targeting the SIBI again, get on the downside of the SIBI, use the SIBI as support. And if we break through this one, look for this to provide support and keep pushing lower. So then you're looking for a range. Now we're starting to switch over into model, the next model, which is the range extension model. So you trade through it, trade back to it, look for a run on range extension. And you're allowed to run all the way back up into here. And it fails if we get above it on a close. Then you're back inside this range again. And you're looking for premium boxes. So before it takes that low, you want to see that get retagged. Right there. Now you can come lower. But keep in mind, you can trade all the way back up in here or half this wick. And you want to see this range extension model now. Morning, Ali. Shorted the 272. 272. Good for you. Well done. Retest 254 and then go lower, more likely. Retest 254. Yeah, there was no retest of that one. Now watch how this is, it's just taking out that low. This now becomes the reversal model. So see how they overlap each other? So I want to see a range extension. So this is your range extension. This small little range you're in, it extended right here. So now you look for, is this the new reversal model? So we tapped it, went lower, took out the low, range extension. That's it. That's maybe all you get. We're looking for a bigger range extension. Didn't get it. We got this small little range here. We got to extend that just a little bit lower, but we're still inside the bigger range. And now you want to see if this closes above here, and then you're coming back into internal range liquidity. So we have an overlapping model for reversal. Protects us against our range extension. So if this range extension is going to hold, this should hold. The reversal model should fail. Does that make sense? If the reversal model works, then our extension is, you forget about your extension now, and we start going along. You see how that held in here? So you're just looking for a retest, and we said it could come all the way back up into here, came all the way back into the constant correction, and now we're looking for this range to extend. Well, this one here next, and then this one. See, there's a swing there, and then a swing there. That one is done now. Now we're looking for this one to go. So you can see why that range extension model has a rather large area you want to see hold price at. And there you go. Ba-boom. See how you're off on a run here? Range extension. Now continuation model. If that makes sense to you guys? I'm going to hold the 120 area. Theta, thanks. The wisdom and review. I had to go back, listen to it again real quick and catch up. Those 4 simple models, man, I tell you, they'll say you can make a shit ton of money if you just study that. Write the rules down. You should be able to just get to the point where you write the rules down on a piece of paper when you're on a plane somewhere. Write down all 3 rules or all 4 rules or all 4 models and all the rules that go with them. And if you forgot some of the rules, that's where your weakness is. You should be able to see it to the point where you don't even have to put it on the chart. And I would assume you don't know all the rules because they're just my model on the market. And if you've listened to me enough, you'll know, you'll pick up the rules as we go. But there's very specific rules that say, if you violate here, I'm out anyway. And you might just tweak your rules, those rules a little bit to say, it's a nice rule, but I want to give it a little bit more wiggle room. Well, sorry, Hadi, we can't claim 153 after it already did that huge run up. You can only claim 153 after we see a break in structure and get back in sync with run in for 153. I get your enthusiasm though, but yeah, we weren't even going to get our target until we had to see a reversal. So that, see how that 15-minute went right there? We traded right up into the premium, hit the right on the premium, reversed, and then you look for any opportunity on the higher time frame to look for a reversal on the lower time frames, the 15-second, the 1-minute chart, for that change in direction. So we never reached the premium on the 5-minute, but we did hit the 15-minute. You have a market structure shift here, or sorry, not a market structure shift, but a run on the highs, premium box. You trade through the premium box on the downside. You come back up inside it here, run lower. We want to see this give way on the downside. It does. We want to see it trade back into it. It does. And then we get range extension on a 5-minute extension, and then the continuation model is next. So 5-minute shows you that. 15-minute found support. It's all there. Yeah. Now, where do we aiming for on the downside? There's nothing down here. All you've got left down here right now is right here. Here's your downside objective. Right there. Show me the money. Look for this box down here. It's 60 at 0.60, 0.34, and 0.009. So anytime you see this, start to look for this. You should be marking out your SIBIs every single time. That's my target, but doesn't mean to say we're going to get there all the time. This is cooperating. That's my target. If we get this change in direction right here, right now, we're looking for the reversal model to change or sell out my discount model or my short model. And don't trade the psych candle. Remember, Russell, we were talking about this. It's a psych candle. Wait for it to finish. Make your decision when it's done. See that hold right there? "36 seconds. Watch. If we start closing above that level, then I'm looking internal range again. And if it trades back below it, wait for market structure shift. Because then you're into this bear trap or this bear flag type of setup, right? So just wait. 13 seconds. I want to see that really accelerate through here now and keep pushing lower. Because then you should be automatically starting to think, I want to start lining up my internal range liquidity hunt. There's the test. Now I want to see that go higher. Look for 50%. Now my short is turned off. Now I'm looking for a run higher inside this range. If it trades back through that, I wait for market structure shift and then get back in for a continuation. So your stop loss, if you're looking for an entry right here, and it came down and took your stop loss right away, you're out. That's a quick run on your liquidity. That's what that stop loss is for a quick run like that. That's where your fail safe. You go, oh, it ripped all the way through my mean threshold, all in one candle. 1, 2, 3. Your ass is next. It ran through all of them. So now you wait. Now you can see a retest of this but we have no body below here yet, so I'd wait. Now, if you're sitting here going, I got out there and this is going to go lower, you're an emotional trader. You're not trading the rules. If you don't like the rules, then change them. Make them suit yourself. Now you're going, oh yeah, maybe the rules aren't so bad now. Maybe they're not so bad now. Now if that takes off, that's the frustrating thing about seeing the reversal. It comes down, takes your stop loss. That is not what you're expecting. Not acting the way you want it to act. So it hit you. It took you out. So now if you got back in and said, I still think that's going short, now it's eating you up again. It's kicked your ass one more time. So now I like that candle's high. It's open, and this retest of this. Now keep going higher. You don't want to see the mean threshold of this candle go. Otherwise, we're hunting for this low again. So that's the support you want to see. Keep going higher. Now you say, how many times do I want to get beat up inside this? Again, that's entirely up to you. But if you're just trading it on the numbers, there's the retest. Push higher. And as soon as it takes that high out, pay yourself, move to break even. Your stop loss is going to be just below the mean threshold of that candle. I wouldn't want to see that get violated now, because you've come down to this. You've worked it, both sides of it. You've even run some liquidity here. I wouldn't want to see it get back any lower than that. So we're just going to watch this piece here now. We're back into 50% of this range now. See how we've already visited this? Why are we coming back in here again? Not necessary. Done. Welcome to the bull flag, or the bear flag smash around. The consolidation in the bear flag. We've only got one support level for a reversal, and it took it out once. So wait for a market structure shift. We don't have a market structure shift here. There's no body broken below here. So you got to wait if you want to go lower. And now I wouldn't bother messing around and with that until I see a reversal up here. And we still want to target this here. That needs to find support at this level now. See how it went above it, below it, above it, below it. How many times do you want to get beat? I need some more market structure change here. Otherwise, I'm just going to keep buying and selling and getting taken out on both sides. So you can see how twice, once there, takes you out. Once there, takes you out. We're below it. We're back into it again. So you say, how many times do I want to get suckered in before it says, okay, now I'm going to take off on you? You go, oh, look, I could have got in right there. Wait for something clean. On a 5 minute, there's no institutional order flow entry drill on a 5. 15 still has nothing. Hourly. Ooh. There's a little tiny one there. Hey, Hadi. On that hourly candle. Oh, no, it's not. There's an immediate rebalance. They're right in there. Right to 0.87. Yeah, right there. That's a immediate rebalance. $0.85 is the old hourly BISI. Let's just tag that right there. And then you're looking for $7.2 all the way to $5.9, which will put you right on my show me the money. Look at this. Above it, below it, above it, below it. Now it's starting to run above it again. You're going to keep losing money inside that when you've only got one level to bounce off of. The reversal, if the reversal model fails, wait for, the rule is if it fails once to go higher, You wait for it to break to the downside. If that fails, or the downside's taken out, you use the extension model. The overlapping models, well, you'll take a hit. And if you just keep running in there every single time and say, I'm going to keep trading that, that's an addiction, man. That is not a clean entry spot. Now you see how it goes into this messy price action. If it's not acting the way you want, wait. Because if you're catching the buzz on this still and you're still in the dopamine hit, you're still chasing the rush and you're going to get beat up. You're going to give back all the profits you just made in here. So you see a market structure shift. Don't mess with it. Thanks, Ellie. So wait for a nice little displacement. I like to see this consolidation here and a nice displacement down, which we typically want to see. Remember, you see a consolidation and you want to see a fair value gap form below it, and then retest the fair value gap for an institutional order flow entry drill and a continuation. That's what we're looking for here. Give me a nice little displacement candle. And if you're chasing this, you go, I knew it was going lower. I should have taken this spot right here. No. Wait. And if you get 3 seconds, we're below this level now. So we're looking for a retest of this. So look at the wicks. The strength is in the wick. So if you find it tap the low or half or 25% of the wick right there, I'll go straight down from here. Straight down. You don't even want to see it come back into there again. Just go now. Leave this open. Create a fair value gap. Do an institutional order flow entry drill right there. Ideally, I want to see it just leave right here now and leave that open altogether. Don't even bother coming back to it. Just leave. Bang. Pay yourself. Next low. Break even. That's got to hold 25% of that wick. Run, run, run. Let's go. Pick up some pace. Don't come back. Let's see how it's just hanging here now. Now you got the institutional order flow entry drill. That was a small count. I wanted to see that really take off there. So now you broke even. Maybe you paid yourself there. Wasn't much to play with. If you're at break even, you're actually still in the trade here. Let's go. Let's go. You got to go now. Let's go. Don't even give me an institutional. Just go. Leave that 25% of that wick. Let's go. Run it, run it, run it. Charge. Look at that right down in the bottom of that large range there. We're heading for show me the money. 5-9. Yeah, baby. Talk about precise, hey? Come on, come on, come on. So if you're at break even, you're just lucky enough to stay in the trade. Pay yourself at the low. You don't want to see that get tested. No, no, don't come back there. You're out. So now we got this little swing, and I've got a bull trap right here in with a bigger bull trap. So wait for it all to go to the upside. So change in direction. We paid ourselves some couple of little shekels there. You don't want to see this bull trap. You want to see the bull trap hold and this reject inside here and come back lower. If you still want to go for this box here, that needs to hold. Show me the money. There you go, folks. All done. That held. hit your box, and all is done. It's nice to leave the show, the last show, on a good note. So you see how that would have failed? So your reversal model would have been the fail of the continuation model that we were looking for. And it supported it still. The continuation model continues, and we hit our box. First time here, really enjoy it. Is there a summary of the 4 models and your interpretation of the rules? No. It's kind of like every day. You're going to be in here every day with us. I should make a movie. I'll make a video of each model, and I'll just put all the rules up here so you can see them. So I'll make 4 models or 4 videos so you can see all 4 models to trade. And they happen on every time frame. If you're new here, who's that? Inner Melody. I'm just going to call you Melody. So Melody, if anybody presents to you a trading model that cannot be proven on every time frame, from 15-second chart to a month chart, in every asset class, and anything on the stock market that produces candles, all 4 of the models I show you can be used on absolutely anything you trade, as long as you follow the rules. Absolutely anything you trade that produces candles and is driven by a regulated market, you have those 4 models will work. So anybody presents to you a model and it says, oh, it's really good in a 5-minute, not so good on a 15, then forget it. It's not a fractal model. And by fractal, I mean if it's algorithmic model that's following the algorithm, it should be able to play on any time frame. That is my litmus test for anybody who comes to us with a model. Say, is this an ICT model? Because every ICT model he teaches you is playable on any time frame, any asset class. So watch here. We're looking for our reversal model now. And this is 11 o'clock. This is the macro at 10:50 here now, right? So watch. I want to see this piece stay open. Create a little BISI here. And a SIBI here. Yes. Create a nice little BISI. Here's our SIBI. Wait for market structure shift. Hadi's like, I can hear him salivating right now. Just like, oh, give me this run. Well done, Darren. Why the show? Oh, I'm just going on I'm taking a well-needed rest. Actually, I'm going for a wedding. Our son's having a wedding in Thailand. So I'll be doing a show again, maybe from Thailand. See that? We have broken above. Our reversal model is in play. Our bull trap is failing. Bull trap. We want to see this last one right here because they're overlapping. And there's our rejection area. Our area we want to see support. See how it's failed? That's further proof that we want to see this continue going higher. So give me a close above here. Use this and this as support in the mean threshold. Look at the mean threshold of that candle. They're all confluences that support this level. Hadi, are you chomping at this? Just hit it. Well, Ashel, thank you for this one, boss. You're welcome, Wayne. That would be lovely. Good to hear that. Thanks. Look for higher hourly fair value gap. Just hit it. Really want to see a big green candle here for 11 a.m. There's the run above. this candle. I like that. So just give us one more little pump up here. Give us a nice little market structure shift. I like this candle though, and I like this confluence of support data points right there. They're all looking nice and tasty. So mean threshold of that candle. I want to see all this act as a breakaway gap now. Not even retest this. If we lose the mean threshold of that, look for the retest of this SIBI down here. And again, we haven't got a big market structure shift yet, so just wait for that. So watch that. Hit it. Let's go. Leave, leave, leave. Look at that confluence. Oh, it's so sexy. So sexy. There. Didn't break it. I might have got in just a tad bit early there. Let's just run above the high. No body above there yet, but I do like that there. So I'm going to put my stop loss just below the mean threshold of this candle. I want to be below here. I'll give it some wiggle room in here. I'll let her buck. And now if you're using your, well, now you got to say to yourself, what take profit model am I going to use? Am I going to use the take profit model 1, take profit model 2? What are you going to use? 3, 4, 5? I'm right at 50%. Look at that. So I've only got one on there. So let's use the take profit model 1 just to show you guys how this take profit model can save your ass if this turns on us and goes back against us. Take that high. You should be moving to break even right here. As soon as it takes that high, it's $5 pays for the trade. I'm out. I want to see that go higher. See how it's pulling back? Pay yourself 50%. That's all you may need to roll over. And we have not broken a body above here yet. So that's where the rule is. I played the rule, lucked out, paid for the trade, broke even. Just wait. We have a retest here. I'll wait for a body to break the high. That's the rule. I like this one. We have confluence again. We've come back and tapped it. Let's keep going though. Still no body above the high yet. And we're sitting at 50%. You see that? Yeah, I want to see a big green. I wanted to see this just take off from here, not come back wicking into it like that. We did it once, so I didn't want to see this. And we still got no body above here yet. See how we've had a couple of little pokes up in here, but we hadn't had a big launch out of here. So the price is not acting the way we want it to act. But we got 20 seconds now. Let's see what happens here. Nope. 8. There we go. There we go. Close. I'm going to go along there again. Stop loss will go to the bottom of that candle. That's where your stop loss goes. When you're using this candle as support, you got to go to the bottom. If we eat through the mean threshold, fail safe is that area right there. If I close through that before it takes my stop loss, I'll close the trade, take a loss. So this mean threshold is critical for me now, and it happens to overlap with multiple confluences now that we've traded above it. Ideally, you want to see it just tap it and go. So there's the, again, back to the mean threshold. Taps this one here. How many are you getting psyched out by this candle now? You're like, oh my God, it came all the way down. We're on the wrong side of it. Just wait. Make the decision after it's done. So far, it's still in our area. We're still good. Now I do not want to see it go down below there. There we go. So now we broke the high. I'll go to break even plus the cost of the trade. There's 62%. So you move to 50. It hits 70%. So that's 50. There's, as soon as it gets to 70, you move to 68. Pay yourself. Now I don't want to see, I've got these two, 1, 2, and then the mean threshold. I don't want to see that just take off here. Let's rip into 70%. Give me my 62% as profit. So you'd pay yourself a portion there if you had a piece on, right? Now what can happen here is now we've got this fair value gap forming above a high. There you go. Now I get to move this to 62%. This is an internal range liquidity hunt is what we're doing here, right? See that 50% held beautifully there? We're risk-free. 70%. You move to 62. If it comes back and tags you out, we're done. That's just an internal quick liquidity model. So if it rolls over on you and comes back down again, you're going to be glad you paid yourself at 70%. So 70% of the trade would be off here. And we only got one on, so we're out now. That's just doing a quick little liquidity model to put $300-400 in your pocket. So now what we look for is, now that we've traded above this level, I want to see this hold price now. So what I want to see is an institutional order flow entry drill right here. Come down, give that little tap. If it doesn't and it takes off, then I wait for market structure. I wait for this bull trap to give way, just like we did here. Shoulder that, and I'm hunting for another premium box. Now you may say I'm giving up too much of my trade. Well, then don't worry about take profit model 1. Worry about use a take profit model 2, or use a take profit model 3. You could even do a 4. You could do a 4. Wait for one standard deviation. Take profit model 4. You're looking for your first opportunity up here. So don't shoot, when you see it starting to leave here, don't shoot down the model, that first model I just showed you, the take profit model. Because when you're just starting out, if you're starting to say, look at this and say, I could have kept that longer, that's greed. That is not trading your model. You go, oh, I just nailed $400. Woohoo! That's more than a lot of people make in a day or a week. You go think about Simu. That's more than he makes in a month. So, and you just made it in 2 minutes, 3 minutes, right? So take profit model 2 would be a box to box trade. So we did not get a box here. So you're just trading once you get off this high here, you trade into that bull trap and run higher. Then we're looking for what? Next bull trap, or this guy right here. That's what I'd be hunting for. What's this one here? Is that one back further? What's that one? Jeepers, it's way back there. Sorry, drive Gary crazy when I do this. Anyway, there's the old low. So that's another target you're aiming for. Looking for this guy right here. This is the no-go zone right here. And it's right on the bull trap. So as you can see, that's a quick little take profit model 1. Take profit model 2 would be you're aiming for the BISI. You'd be aiming for right up in here. This line. I'll even put the line in there for you. Hadi, did you catch this one? I just did a demonstration of a take profit model 1. So watch here. That's the upside target. If you're using take profit model 2, you're already into break even, pay yourself, or move your trade into a bonus. You've paid yourself plus a little bit, and I'll let it run. And as soon as it hits that level, your take profit model 2 is finished. Watch the no-go zone. You might want to pay yourself at the no-go zone. Sorry, I got to catch up. Good to hear that. Thanks. Looking for the fair value. Really want to see a big green candle. Another one. Fire, fire, fire. Are you still in Toronto? It's crazy because I really wanted to meet you in person. Yeah, Wayne, we were kind of looking forward to seeing you at the hotel, but you didn't turn up. But that's okay. I'll be back there again next year. Thanks, Darren. Have a wonderful trip and hope to see you soon here in Toronto. Bye, everyone. See you later, Reza. Yes, I plan on having a great time. There's your pay yourself at the no-go zone. Wait for it to get through it and then start looking for our box-to-box trade. Again, keep in mind, this has not been activated here. So if this rejects off of this break, this bull trap here, and starts to trade back into the range again, look for down here. So you're always looking for a potential. Now that we've taken out a high, we always look for the BISIs. So if you're using a take profit model 3, you wait for a BISI to get broken on the downside and your trade in your long is out. That's a take profit model 3. Give me an entry. I was looking for 142. End up working late, man. Sorry about that. That's okay, Wayne. It's no apologies necessary, my friend. No apologies necessary. We will meet the next time I'm there, and I think we have another one back there next year. So we'll be back in Toronto again. My wife's got another school to evaluate over there, and I get to hang out with Hadi and the boys. So you can come join our little next 2026 summit. Toronto Trade Summit. Anybody else from the States wants to come up and meet us, you can meet us there as soon as we get confirmation and that she's gonna get that gig. So our show me the money box, look at that. You can't ask for a nicer little tippy tappy there, and look at that snap off of that. What a nice objective, hey? Who says you can't call the low? Just kidding, you can't. But isn't that beautiful? Isn't that a beautiful downside objective? And a change in direction, and then a confirmation, and then a continuation, internal range liquidity, right to our no-go zone. That's where you're expecting to get some resistance off of the confluence, would be off this bull trap. So we've hit it. I want to see if we get a little pop through here because there's a little imbalance. You see that sitting right there? Watch that level. Mark it out on your charts. And yeah, you got to dig in here, folks. You really got to look at these little tiny areas. Michael's not kidding when he says that volume imbalance is going to get hit. And it may get hit several times through a bunch of candles that you have to hunt through. So just look at it as areas of support or resistance. I know we don't use support and resistance, but, you know, it's buyers and sellers. That's what that is. It's more buyers holding that up now. They're just buying that and selling it and taking it higher. Because that's what we know. The markets are driven by buy and sell orders. $192. $25, $111. The next one, the next no-go zone is this first presentation fair value gap. You may get a retest of that and a rollover. Just remember, it could come all the way up into here. It could even wick through this level, wick through the bull trap. But if a body doesn't break here, you're going to get your ass handed to you. That'll spin around and come all the way back down again, especially at 11 o'clock. Now we're at 11 o'clock. We tend to see a reversal at 11 o'clock, and it tends to make a run on the nearest liquidity swing. So I'm targeting this. If we break down in through here, and start closing below that level and finding support at it, I'm targeting this down here. Buying and selling pressure. That's exactly what it is, Russell. So keep your eyes down here. I'm going to put it as a don't forget me. The bus will come back and pick up the little kid back here at with his little lunch bag around lunchtime. Pick him up. What's our 5 minute? Look at that. We're right up inside here, right on top of this, deep inside this range. We have not broken that high for a continuation on a 5 minute to the upside. We have not broken the 15 minute to the upside. We have broken it on a 1 minute chart, just trading an internal range liquidity hunt. And now I want to see if we come all the way back down, trucking back down here again. I'll be right back. Okay. We are back. So you see how that go, no go zone supports price or rejects price and sends it back lower. So you kind of look at this as, and this is kind of important. There's only 15 of you in here to kind of get this piece of information, but it's a nugget. Okay. If we get to a point where we have not hit a level, or we've not validated a level, we've just ran right through it. Look for the no-go zone or the bull trap to be a place to reject, to come back and get this. Okay, so this no-go zone right here, we wanted to, it broke through it. So now we're looking for further upside. So we're leaving this up, which just tells us that we're very bullish. So the next no-go zone, we didn't take that. So if we're reversing and we're coming back down, internal range liquidity hunt, the moment we traded below that level, remember I said, look for this level right here. Did you mark it out on your chart? Because when we trade below it and trade back into it, right there, you're short. That's the reversal model. Reversal, short. Internal range liquidity hunt. If you're doing an internal range liquidity hunt from that perfect entry, from that low to that high, and we do an internal range liquidity hunt, if you just did 50%, pay yourself at 50%, take half your trade off, move your stop loss to break even, you hit 62%. Look at this. You hit 62%, take another 10% off there, stop loss now moves to 50. See how it did not come back and take you out? Then all of a sudden it went rip right through 70, 75, and you're just going doot, doot, doot. You're trailing it all the way down, hit 88, you're out right here. So you got a perfect entry all the way down to 88%. You paid yourself 88% of your, so 50, 60, 70, 80, 90% of your trade is off right here, and let the rest run. Just let it run now. So if you kept trailing your stop loss behind using the rule of go to the next one behind. So if I hit 70, you go to 65, 75, go to 70, you'd be out right there. But if you're like 90% of your trade is off, you can leave your stop loss at 50% and let it buck and let it aim for our downside target. Right? So you've got all that internal range liquidity. If that reversed on you and went back up, you just giggle to yourself that you feasted on all that with no risk. Like you went to right into no risk real quick. Half your trade is off. You've already paid yourself from here at 174 all the way down to 152. That's 24 handles in 3 minutes. 1, 2, 3 minutes done. Then you get another 10 handles here, then another 10 handles here, and another 10 handles down to here. So from there, 174, that's 50 handles. All in a matter of 5 minutes. Internal range, take profit model 1. And now I bet you're giggling to yourself that you got out when you did. Because look, it's come all the way back to 50%. So the last 10% that you had on is out of the trade now. Because if you're on the wrong side of that and that goes higher, you just nailed all the liquidity internally in that range. Does that make sense to you guys? Why take profit model 1 we didn't get much out of it the first time. And it came back and took us out. But the second time you did it, you just juiced an orange, man. You squeezed all the juice out of that. And now you just wait for your next model. Wait for your next. If you're an internal range liquidity hunter and that's all you do, that's the only model you look for. And you were at a perfect entrance, scaled out 90% of your trade, 10% closed out right there in profit, you're done. I bet some of you guys who are new here are going, oh, this is the last show. Don't forget to like and subscribe, my friends. Like and subscribe. So we have no reversal going on here. So you're looking for a potential run from here to here, 50%, which is this little sibby right here. And it's right inside the bull trap. So I want to see it just come back, give that, it can give that a little kiss right here, and then roll over and come back lower. If we start to trade through it, it's a reversal model. and then you're looking for the bull trap. Unfortunately, inside this range, you're well over 50% of it. So you're paying a premium for it potentially to turn on you. So it's not a super clean entry if you want to keep going higher. I still want to see this get hit down here. And how are we doing? Are we still in there? No swing below this low yet. We're still inside this range. Lows taken here. Watch this level right here. Are you drawing these out on your chart? Are you getting lazy and just ignoring them? Because they're important. I'm telling you. They decide whether or not, see, that's an institutional order flow entry drill if that continues going lower. If we're still targeting here, that's a nice little place, stop loss above. And then you start saying, I don't want to see that break through that consequent encroachment of this SIBI, and it's right in there. So I don't want to see it start. I want to leave that open. If it's really aggressive for me, hidden for here, I want to see that stay open and start running lower. As soon as it takes that low, you pay yourself. That'd be like the daily chart, right? Looking for the next down, previous day's close. Now I've been moving right into there. Just the fact that we're breaking these lows here, I don't want to see it come back through there. I want this to head lower. So demand price action, because don't forget you're paying for a real discount here inside this range. If that reversed back inside you, you do not want to start seeing it break back through here again. It's done its thing. And you've got your institutional order flow entry drill. Let's go. So if it comes back through there, you're at break even and you go, okay, well, I'll wait for some more clean out price action. I'm not going to sweat it. And if it gets there, all that negative shit that goes through your head, ignore it. Just wait for the next setup, man. There's plenty out there. That's why you study the price action on a 1 minute chart. It's no different on any other chart. Now I'd be moving that into profit because we broke the low. So that entry you had there on the institutional order flow entry drill we just gave you, move to this candle's high. You pay yourself. If you can afford to scoop something out, pay yourself there and wait for the rest to hit. And you're in another risk-free trade. Out at equal lows. 511, good for you, Hans. Well done. Well, you pay yourself. I still think this box is coming. They're not going to leave that untouched. Don't forget me. Boom. And my friends, we bring in our favorite character, our carrot. Look at that. Just nail it right to the bottom. Now let's see it react off of there. Leave this portion open. Otherwise, look for this to fill. If that pops through there, look for that to fill. And we called that right from up here at that go, no go zone. Delicious. Look, there's their fill right there. Done and done. Now, if we close below here on a close, I want to see come back to the carrot. Don't take the low just yet. We're looking for a range extension model now. And how many people thought we're going way up there? We're watching here, right? That's where we wanted to see it go. But we wanted to see it get through the no-go zone first. It did not. Gave us the reversal right there. Precision entry. That's the target. We've hit it. We don't want this low getting taken just yet. We want the extension model to come back into here first before we take that. If it takes it first, now you got to switch from a continuation or an extension model to a continuation model. Don't take it yet. Come back. Come back. Don't forget me. It just came back over, ran over the kid with the lunchbox. He's just come out and say, wait, wait, wait. Now you got continuation. See how aggressive that is? Look at that. Beautiful institutional order flow entry drill. We gave you a perfect entry here, an institutional order flow entry drill there. We hit the target, went through the target, and now we've got range extension, and you didn't get a chance to get in on that. I don't even know if you could have even gone in on that in a 15-second chart. Nope. Just missed it right here. That, my friends, is how you do it. So now what we're looking for is, do we get back into that zone? So don't leave that. Again, it's one of those don't forget me zones, right? Don't forget me. Because you've traded through it on the downside. Now I want to see it act as support to take price lower. Otherwise, this bull trap or this bull or bear trap that we saw break to the downside, now it becomes our support level. And it's the same thing as what we look for when we have a bull trap broken. I look for a fair value gap. A plus entry is continuation. A entry is back to institutional order flow entry drill. B is the midpoint. C is 75%. D is a full fill. Same thing happening below the market. I got a fair value gap forming below this, right? I'm going to make sure it forms. If not, I want to see it tag low, wick, mean threshold, its low of the, or its close to the mean threshold. If we start eating through that, then what are we targeting for? That level back there. So watch this mean threshold right here. So just watch price action, just study it here. There's the retap of the first one. That's your first SIBI retest. That's an institutional order flow entry drill, kind of like what we had here, right? Now you want to see that. If that's super aggressive now, it should just leave from here. So that may be one of your entries, low level, low leverage. And as soon as you hit that low, move to break even, pay yourself, and get yourself for risk free right away. And we're digging more into show me the money. And as soon as we get through show me the money, this now becomes the go no go zone. That turns into show me the no go zone. Right? Show me the money. So that is a downside objective, that if we bounce off of it, it's a downside SIBI that I want to see, or discount box that I want to see hold price and send it back higher. If we eat through it, now we use our range extension model. There's your institutional order flow entry drill right inside our candle. I don't want to see any more than the mean threshold get closed above. If it does, look for the no-go zone. This turns into so think about this. There's your first fair value gap, right? So if this down model, if you're using take profit model 3, you entered in here, your take profit model 3 fails for you if that's not your target. It fails for you if you want to see this keep coming lower. It fails for you if we close above that imbalance right here. If it closes above that, then your trade's done for the short using take profit model 3. If you're using take profit model 3 and it keeps going, and it just came back into a new entry point, which we're looking for a range extension or continuation model now. I want to see that just book it down here now. Got that short discount. Could we see as I? Could we see as I? What do you mean by that, Wayne? Sorry, I'm not I don't understand what you're saying there. Nice. Oh well, nice. But next bus. New week opening up filled now. 25.21. Might give good short entry. Her. Rod her. I'm getting in, rod her. See this waffling? I hate waffling. I hate waffling. Price action acts the way you want it to act. You got to leave. You got to do your thing. You're getting into the lunch hour stuff now. And I don't like messing around with lunch hour stuff. It just can be very unpredictable. It's got to get out of Dodge, man. Got to get out of here. Bottom of the hour. Crazy Ivan. $27. There we go. There we go. Institutional order flow entry drill. Back into our level. 50%. Love it. Keep coming. Pay yourself at that low. Move to break even. Zero stress trade. We're now into a zero stress trade. Looking for the downside. I'm looking for 009 now. Mr. 009. Let's do 007. Come to me, money party. There's 09. There's 007. Dun, dun, dun. Boom. Where's my carrot? Did I take my carrot off? Gotta love the carrot. Gotta love the carrot. All right. So now we're looking for this whole thing to close below here, not just a wick through that. But there's Mr. 007. Pay yourself. Nickels and dimes. Who cares, man? Pay yourself. Ba-boom. Continuation model hits our target. reversal model, internal range liquidity model. We didn't get a range extension model, but we do have a range continuation model. So there's 3 models right there of the 4, and we're killing it. Just so you know those 3 models in a 1-minute chart. It's delicious, man. 3 of the 4 models, and you're still going. So now you just wait for take profit model 3. Remember we talked about take profit model 3. If you entered in right here, take profit model 3 did not get broken, did not get broken, did not get broken, did not get broken, did not get broken. You're still in this trade from way up there. From take profit model 3 from 174. That's 100 handles, 170 handles almost now. 174. Yeah, that's 170 handles from there to there. Box. All the way down to our discount box here. Premium box. Ran all the way down to a previous discount box over here. That's box to box. If you would have caught that sucker right there at 244, there's 240 handles to there. Box to box on a 15-minute chart. Hadi, have we convinced him yet that our box to box is a delicious thing? Are you guys convinced that my box to box strategy works? Followed up with 4 trade plans, 4 trade models that will support your direction and will catch a reversal. So this take profit model 3, watch, see how, is there one there? Yeah, there's one right there. That's closed above it. You're out of your trade. That long is out right there. As soon as that closes, your reverse model's done. If it closes above here, now you look for a market structure shift right off of our bottom of our discount. So if we expect a nice little reversal to happen here at time and price time, this is just the crazy Ivan going on right now. They tend to have a look back into 38 minutes into the hour. This could be just a simple crazy Ivan and then turn around and come back lower on us. So where's our no-go zone? Right there. So crazy Ivan can come all the way back into here. If we get a market structure break with a body above this, then we're expecting no-go zone to get broken to the upside, because you got to start pulling your fib. Right there, 50%. Close above that, come back in, find support, hit the no-go zone, which is right at 62%. And if it retraces off of there and comes lower, you can see how they start to play out. They start to look for specific levels that overlap confluences that should provide support at 62% of this small little range run back, right? If the bull trap holds, we've traded above 1, traded above 2. Now we've got the reverse. The reversal model is also our take profit model 3 in this case. So if we get a retest of this one and this one, if I trade through that on a close, then it's coming lower. And that's unfortunately the end of the take profit model 3, because you got a reversal here all the way back into bull trap. So small little range. You want to see it enter in here. Like when this one popped up above, you want to see a wick come back into there, then hunt for this internal range liquidity with the bull trap. It's a tighter version of a larger range. So see how we've traded back through this level here again, found support at it. Now we're back inside this small range, and you got overlapping BISI and SIBI right there. Now, if it closes there in the next 35 seconds, comes back up into that, look for continuation. That's how quickly those models can switch back over on you. You're going long, you broke through it, you're going short again, you broke through that support level. You want to see that hold. If it doesn't, it now becomes an inversion. Now we're back inside this range. You want to see if it closes below here now. We've got into the rejection block. So if you are short there, you pay yourself at rejection blocks inside a small, tight little range. And if you don't see those and you say, I'm form fitting it, you don't see the data points that I'm pointing out. See, we just wicked there. wait for a body to close below here. Then we get into range extension model. This is an internal range liquidity hunt. Small, tiny little range. There's only one BISI and one little SIBI down in here. And we've run all the way through entry off of here to here, box to box inside this tight little range. So now we want to see if this holds. If we close below here, use that for a range extension model and then a continuation model. Otherwise, you want to see market structure shift above here. Use this as support and this order block here is support to start pushing for the no-go zone. See how we're back and forth between premium or inside this last up close candle's mean threshold, down close candle's mean threshold. If you didn't have this BISI SIBI combination inside here, and these were all filled with wicks, you'd be looking at that candle and that candle's mean thresholds. This one's been chewed once, twice. So they're drilling into this one. You see how the drills are coming down. They're weakening this candle. That's only been hit once. They're drilling into this. So they're trying to weaken this candle. It's trying to hold price back. And it may do it. It may just send it blasting higher. But we want to see a body break through here and take out our little SIBI down here. There is one right there. You see it? Little tiny fella. And look how many times we're drilling through it. Rejection block every time. So let's look for no body below there yet. If this mean threshold holds, we're looking for these two. SIBI, BISI, they're all kind of overlapping each other right now. We want to see this blast through here, get on top of this, and start running for the next line up. So this guy's still holding. A couple of holes in him. He's still holding. Look at that BISI right there. Body's still holding it. So you got one that's giving you support on top of a candle that wants to give you support on top of a candle that wants it to go lower as an inversion. Out for today. Glad I found your channel today. Looking forward to the next time. Enjoy the wedding. Thank you very much, Melody. Thank you for tuning in. Like, subscribe. Appreciate it. I do appreciate your time, everybody's, and I hope to get to know you better and you become part of the family. Join our Telegram channel as well. You'll find when I'm not here, that's the place to go to catch all these guys like Hadi and Russell and Kevin and those guys. They're all in there. They'll all gonna help you out with the trading setups, and that thing's still live even if I'm not around. They're still feeding you. So join the Telegram channel and you can get your buzz, get your fix. There's lots of guys in there that know what they're doing. Sending love. Send them a love, my friends. Send them a love. Okay, looks like we're rounding off the day. I'm pretty much done for now. We're coming into the lunch hour, 11:30. It's done its business. It gave us our 11 o'clock reversal that we're looking for untapped price action. Michael likes to talk about how it tends to run for the most recent significant swing point, which is obviously right here. I thought I was being a conservative saying here, but it definitely ran out that. So if we're looking for a reversal or change in direction now at 11:30, 12 o'clock may run down one more time into this and then give us a pump up. Or if 12 o'clock gives us a pop into here and we start hunting for this liquidity after lunch or during lunch hour. So kind of just watch these levels right now. See how that mean threshold's holding. Body above here. Not a wick. Wait for the bodies. Wait for the body. A retest of this down here. Consequent encroachment. Don't chase the candle. This is the psyche candle. It'll do some mental damage on you. Wait for it to finish. Make your decision. If it takes off on you and you feel the need, like I should have got in on that, that is not how you trade. You're gambling. You feel that I got to have that rush right now. I've got to chase this candle. The crazier it gets, the more you can say, great, that's awesome. That gives me a nice little breakaway gap if I can get that. And I want to see that stay open. Otherwise, wait for a body to close above here. And then its mean threshold is all you want to see. 5, 4, 3, 2, 1. There. Now come down, give it a little tap. Right there. I'll go higher. You don't want to go any lower than that mean threshold here, because this has been worked already. So to me, it makes no sense for it to come back to here. That's all I want to see is tap and go. Perfect. Glad to see it. Melody, welcome, welcome. I didn't see if Melody joined there, do I? 232. Man, you guys are really chatting away in there, hey? You are chatting away. There you go. Continuation. That's beautiful. Keep going. I'm going to go along there, even though it's a bit late. I'm going to go along there. I like this. I'm going to stay just below that candle. I don't want to see any of this get retested now. And we're going to go boxy to boxy right here. That's it for me, you guys. That's my target. The next upside box in the premium portion of that larger range. It's right at our next bull trap. So anyway, that'll be it for me. Thanks for all your support over this year. It really means the world to me. Thank you so much. I'm sending out the love. Thank you, thank you, thank you, thank you. Thank you for tuning into our show. I do appreciate it. I know you have many other people out there you can choose from, and I do appreciate you spending your time with me and listening to me babble away about the charts. And thanks for meeting up with me in Toronto, you guys. I do love it when I get to meet people who love to talk about charts and share what we know. So until I see you from Thailand, I will see you guys. If I don't see you from Thailand, I will see you in November. Sorry, December 1st, 2nd, 3rd, somewhere around there. I'll see you then. Thanks again for tuning in, everybody. Love you all. Like and subscribe, and we'll see you guys in a short little while. See ya.